Greetings, everyone. How are you today? I want to welcome you to the Intro to the Market class. My name is River, and I'm really glad you could join us today for this class. All right, so let's get into it. First off, Intro to the Market. Who is this for? So, this is an introductory class for someone who is new to the market and someone who is new to trading stocks. So this is going to cover two main focuses. What is a stock and what is the stock market? And how does this work? So this is a very basic class. We'll also have tips for new traders, and I'll definitely remind you guys about the rest of the BlackBoxStocks education program as well. However, who should take this class? Again, this is for someone who is new to the market, not an experienced trader who is new to the BlackBoxStocks platform. If you are an experienced trader and you are here because you want to learn how to use the BlackBoxStocks system and all the amazing data that it provides, this is not the class for you. That one is called Orientation, and it is typically taught on Monday nights. So again, this is Intro to the Market. This is the very beginning. This is for newbies. This is for people who maybe you haven't traded at all, or you've traded just a few times and you want to learn more about how the stock market works. This is for you. So let's get going down the road very quickly. One moment. All right, again, you can get me, you can hit me up at email, river@blackboxstocks.com, or on Twitter @greatrvr. And I am a part-time options trader. I like to scalp, I like to swing trade, I like flow trading. I'm really into trading psychology and trading philosophy. But I'm a part-time trader. I'm a full-time educator, and my doctoral degree is in human learning theory, and I study, among other things, the science of how the human brain learns things and how that differs from other animals and how we can apply that to education. So you'll see some of that at play during this class today. I've been at the university, an American university, for 17 years. And this class is designed around an approach to learning that is very powerful when you're trying to learn anything. It's called iterative learning. So think about this, especially if you have traded at all before. Think about this relevant and relative to your trading. Iterative learning means we learn this way. We do an action, we fail at the action, we reflect upon that failure, we refine the action, and then after our refinement, we redeploy the action. And then that is one iteration. And then we repeat. And then we repeat again. And all the way, we learn as we are making these iterations that feature failure. So you will definitely hear me talk a lot about failure as a way to learn. And if you are new to trading, there is no reason you need to lose a lot of money, in as much as there is no reason you need to risk a lot of money. So you're going to see me focusing a lot on this today. Failure is a part of learning to trade. So you're going to hear me say several things, and one of the main things is this: when you are learning, keep your position sizes small so you can absorb the losses that you will incur as you are learning throughout this iteration. You reflect on it, you refine it, you redeploy it. But if your failure is so big that it just takes you out of the game psychologically or financially, that's no way to learn how to trade. So human learning theory is very helpful when you're learning how to trade, because it applies to many, many things, and there's no reason for us not to apply it to this. So again, you're going to fail when you're learning. So keep your position sizes. That's just the amount of money you spend on each position as you enter a trade. Keep those small. So you need expectations when you are new. The internet will give you bad expectations. So think of it this way. You need to have time. You have to sit in front of screens and you have to trade. There is nothing that replaces just time in the seat, as they say. You're going to have to learn basics. You'll have to read books. You'll have to watch videos. You'll take classes like these. You'll do journaling, etc. All of this reflection and all of this learning takes time. There's no way around it. If you just don't have time to learn to trade, you won't be able to learn to trade. You have to have time to do it. You have to be dedicated. You have to be dedicated to learning trading. Trading is a set of skills that can be developed like any other set of skills, but like any other iterative set of skills that is learned recursively, you have to be dedicated to the process. And of course, you have to have the right tools, which not only involve whatever indicators you use and the broker you choose and all of those things, it of course involves the data that is provided by BlackBoxStocks. You have to learn how to use the platform. And that takes a while. There is a lot of information you're getting that you're paying for with your membership, and those are tools that you can use to be more profitable. But when it comes to expectations for new traders, I like to tell people to try to have a mindset of learning in the beginning, not a mindset of making money. I know that sounds weird, right? Because everybody wants some of that. Everybody wants the dollars. I mean, that's, you know, that's why we're trading, right? That's what's going on. People want to have money and amazing drawing skills just like that. So nonetheless, let's just get rid of that. Remember, when you're learning, you're going to make mistakes. And if you consider the small, I repeat, small losses that you will incur, why are they small, River? That's right. They're small because you are taking small position sizes, maybe even tiny ones. However, if you consider it as your time to learn to trade, the first 3, the first 5, maybe the first 8 months, whatever it takes, everyone is different. Don't worry about making money immediately. You are learning how to trade, and that takes a while. So it is good to have the right expectations, especially when you're a new trader. You're going to have to learn your tools, and it just takes time to do that. So one thing in human learning theory, the way we're going to look at this, what is a stock? We're going to learn about that. What is the stock market? We're going to learn about how to learn things. In any kind of learning, you're going to have a core concept. That's when you're learning something new. Core concepts are basic understandings that beginners must learn deeply. These core concepts are foundational. That means everything is built from them, and you have to have a very strong basis to build upon. And core concepts, regardless of the topic, are more complicated than they seem at first glance. So you're going to be focusing on the core concepts tonight of what is a stock, what is the stock market. And with trading, like anything, you have to avoid distractions. What we'll call distractions is information that is no doubt important and useful, but not necessarily to beginners. It can distract and confuse beginners. So you don't need extremely complicated concepts when you're learning to trade. You don't have to get into extremely complex analyses of the market in order to learn the basics of the market so you can trade and learn how to improve as you are becoming a more experienced and hopefully more profitable trader. Learning another language, driving a car, those are great examples of similar learning endeavors. And trading is like learning another language. There's acronyms you have to learn, there's words that people use, there are all sorts of things that you just don't know in the beginning. It's also like learning to play an instrument. I've taught people how to play guitar for a long time as well. And let's use that guitar. You can just use that example. You can think of guitar or any instrument if you happen to play an instrument. When you want to learn how to play guitar, the first thing you have to understand, in my opinion, is learning your chords. That's the first really functional thing. Everything is built from chords up and down the fretboard. You have to know various chords in various positions, and these chords are more complicated than they seem at first. In this case, it's actually painful. You're twisting your fingers and hand into ways into which they have not evolved to twist. It causes pain. Chord changes must be fluid, immediate, and unthinking, and it takes 3 to 5 months for most guitar students to get there. And yes, you guessed it, most of them quit. Most of them do not put in the work they need to do to play guitar, because instead of learning their core concepts, they are getting distracted. They care too much, in my opinion. Beginners care too much about brand of guitar, what type of gear, what type of pickups. Oh, Eric Clapton uses Trainwreck amps, or whatever the case is. It doesn't matter when you're learning. Learning about gear and learning those things, of course, is very important to guitar education, but that comes later. When you are learning, you just need the basics. Skill is not dependent upon equipment. Eric Clapton could walk into a pawn shop and pick up a piece of garbage and make it sound miraculous. Trading is a similar thing. A talented trader does not need tons of equipment to do his or her thing, because it is a set of skills. And to learn these skills, you need to learn the core concepts and try not to get too distracted. So let's apply that to the stock market and see where we go. So, what are stocks? That's core concept number one. What is the stock market? How does it work? How are we going to make money from it? So when you are a new trader, you're going to have distractions that come primarily from the internet. The genius internet that it is going to show you things. You're going to wonder, what does all these things mean? What is FUD? I don't know what that means. They keep saying long and short. I don't understand. I'm confused. What are the best indicators? You're going to feel the need to go out and buy 6 brand new monitors and a fancy trading chair. Don't do it. Just don't do it. I mean, look, it says no. It says no right there on the screen. It's not, the screen wouldn't lie to you. Yes, you need real estate. That's true. You need a couple monitors, probably. One trader I know in the BlackBoxStocks community, a full-time trader who is amazing, just trades off his phone. Just off a phone. No 3 monitors, just a phone. Probably makes 5 times my professor salary. Easy. Nonetheless, you need some real estate. You need certain things for sure. You need a very reliable computer and a very reliable internet connection. You need a good router. You remember your router? That thing that's sitting under your television cabinet? It's covered with dust right now. Remember that thing? It's going to die at the exact wrong moment. So you need good equipment. You need the basics to be in working order, but you do not need ambient lighting and a $2,000 chair to sit upon as you place your first 25 trades. That's just my opinion. And of course, the opinion of the no right here in the lower right-hand corner of your screen. So what are stocks then? Think of them this way. Shares represent partial ownership in a publicly traded company, also called equity. Equity is called ownership, so you'll hear stocks and equities, you hear them discussed the same way sometimes. But shares will represent partial ownership. I want you to think of it that way. When you own a share of a stock, you own something, which seems different than if you own maybe a tangible good, like say a baseball card. You can hold the baseball card in your hand and turn it over this way and that. It's a durable good. So I think the fact that there is an electronic interface that is a little bit of a disconnect between us and the shares that we own and the way that we trade, it provides a disconnect. I want you guys to think of shares of stock as partial ownership in a company. Companies issue these shares of stock to raise capital, right? We're in this capitalistic system. They want to expand. A company wants to take its vision to a broader audience, and it also wants to avoid debt, you know? So they will often go public to raise money to grow and expand. And shareholders have a right to share in these potential future profits of the company. That's the thing. Hopefully, you will be able to profit from owning these shares of stock. So, of course, there are many different financial goals that go way beyond the scope of this. But some people just simply want to make a little extra money on the side when they trade part-time. That's what I do. I have no desire or intention of ever trying to be a full-time trader. So maybe you just want to do it part-time to make a little extra money. Maybe you want to bolster your retirement. Traders will do that quite often. General wealth accumulation or just income supplementation. And some people, of course, want to go full-time. People can do that. It takes a lot of skill, it takes a lot of time, but people do that. So you have these stocks, and be aware, I didn't really know this in the very beginning, and it makes perfect sense to me, but be aware there are different types of stock that are suitable for different types of investing. Not tonight, but in your future, you're going to start thinking about what kind of investing do I want to do? Do I want to be an investor, a long-term investor where I'm buying into companies and holding those shares of stock for a long time? Years, maybe? Decades? Or am I more comfortable with short-term setups where I want to just sort of trade and take advantage of price fluctuations and short-term price movements? And you've heard the term perhaps intraday trading or day trading. That is a trade that is opened and closed in the same day. That's called an intraday trade. Maybe that's what you're into, but depending on what you are wanting to do as far as investment type, not all stocks are different. There are various types of stocks, and a blue chip stock will be different from a speculative stock, and what's the best way to use those in trading theses. Cyclicals have different reasons behind them as far as why you would trade them or why you wouldn't. So depending on what type of investing you would like to do, which you probably don't know quite yet, but depending on what that is, will depend on what type of stock you will zero in on and start learning more about. So at this point, I like you guys to think about if you know a local business owner in your area. If you happen to know someone who owns a business, or even if you kind of know someone, think of just a local business. We will use this hypothetical example of Sam's Guitars. So Sam has a guitar store and he's doing great locally and he wants to grow and expand. So how's he going to do that? Well, he's going to sell a portion of equity in the forms of shares of stock to investors once he goes public. So it's useful, I think, to think about a business maybe you have a connection to, maybe just a place you like to frequent, perhaps. If you owned some shares of that business's stock, you would be a partial owner. So there is, a bit of worth involved that sometimes gets passed over due to the, I think, again, electronic interface, this electronic overlay that keeps us removed sometimes from the realities of what's going on. But just keep that in mind as we move forward. A share of stock represents partial ownership in a company. So how do we make money by trading? It's a great question. At this point, it seems like if you have been to college yourself, or maybe just in high school or wherever, whatever your educational journey has been, Think back to some of your basic economics classes. Maybe you had professors like me, or maybe you had teachers elsewhere, or maybe you just learned online, or you just read books at your local library. But you learned some basics of economics, and you'll be reminded of some of that here. So we're wanting to make money off of the stock market. So we buy shares of stock. Let's say we buy a share for $10. And then we hold it for 3 days, and it goes up to $12. The price has gone up, so the stock has appreciated. And then it goes back down to $9. So it has depreciated if it goes down. So price fluctuation is the key here. Stock appreciates and depreciates. Collectively, we call that price fluctuation. And the thing is that is sometimes surprising for people new to the market is how quickly that price fluctuation can in fact happen. You know, sometimes it happens very, very quickly, and that can be surprising, and that can catch people off guard if you are new, and you may sell something prematurely out of panic, or vice versa. So just be aware that there is appreciation and depreciation. And if you have traded at all, I like to ask you at this point, do you feel like now, or have you ever felt like in the past, that the market hates you? Have you ever felt that hatred? Sometimes new traders feel this way. It seems like as soon as you place a trade, right? Like go back even before that, you plan out something, you do your due diligence, you do your DD, as the internet tells us to do. But of course we should do that. Know what you're doing. We've done our research. We have the data on our side. We've done our charting. We have looked into the price action. The volume looks good. It looks like it's the right time to buy. And then as soon as we push the button, what happens? That's right. It just bleeds out. You have thought it's time to go long. It's time to buy. And then as soon as you buy, the price action falls. You start losing money. You're 20% down. You're 22% down. You're freaking out. And then what do you do? Well, of course, you're new, remember? So you're panicking. So then you sell because you want to protect your capital, right? You don't want to lose more than you have to. So you sell your stock, and then what happens? That's right. That's correct. Yes, you're telling the truth. As soon as you sell, the price rises back up to maybe even where you bought in, and maybe even goes on to would have been profitable if you had just had held and you didn't. So all of this means that you feel like the market hates you personally, and that is not the case. Of course, the market is not alive. It is not aware of anything. Don't get metaphysical. There's no room for metaphysics in the market. It doesn't hate anyone. It just does its thing, and we have to watch it. In fact, if you have to anthropomorphize the market, which you shouldn't, but if you just have to, ascribe apathy to it. It just doesn't care about me. It just doesn't care about you. The market does its thing, and our job is to watch it, to observe it, and to identify patterns and probabilities. That's the job of the trader. And we do that through chart patterns, support and resistance, price action, volume. You'll learn all those things. Those are all things on your to-do list in the future. But the idea is you're learning to identify patterns so you can make trades that have a higher percentage, a higher probability of profiting. And when that happens, you have less of the feeling that the market just hates you, because you have, maybe you bought right at resistance, right? And then the price went down, and then maybe you sold real quick right before it bounced off support or something, and you just didn't know that yet. So that's what it's about. You have to learn how to identify these patterns and probabilities. That will help you deal with the price fluctuation. And no one knows what's going to happen. Nobody can predict what's going to happen, but there are higher probability setups. And if you take nothing else out of this tonight or today, whenever you're listening to this, just remember that it is in the trader's interest to have the most data-informed trade theses he or she can have. You want your trades to be informed by multiple points of data. You don't just want to buy something because the price is going up. You have to have multiple reasons for buying anything. You want to have data behind your thesis, behind your trade. Don't just chase candles going up and down. It just won't work. Save your money. Just if you're going to do that, save your money and just do something else. You have to have data informed trade decisions. BlackBoxStocks can help. That's what we do. We provide data and provide classes on how to interpret the data, and that's what's going on. Back to economics. There's price fluctuation over here. Of course, that's what's going on. We have to identify patterns and probabilities. And why is it moving? It's not moving because the market hates you. It's moving so much because of simple supply and demand. Demand drives price. That's what's going on. No magic. If many people are buying, the price goes up. If more buyers than sellers, the price goes up. The opposite is true. If more sell than buy, the price is going to go down. It's not mysterious, but it can seem mysterious when you don't understand the basics of charting and the basics of support and resistance, and you haven't yet learned how to really understand how are you going to incorporate volume as well as price action into your trades. Those are the things that you have to learn in the near future and continually work on. It's not like you learn these things and then you're just good. You have to keep learning them. So what is the stock? So what is the stock market? Yes, it is a centralized location specifically designed for the trading of shares of public companies. It's called the market, also called the markets. But let's think about what is it on a foundational level in a concrete way. So there are these three markets you'll hear about. The NYSE is the New York Stock Exchange. That's the oldest one. It's been around since the 1790s. The financial district, right, in Manhattan. And when you see those classic photos of people at the quote stock market, and they have on the colored jackets with the patches and the numbers sewn on, and they're always holding their heads as if in agony, right? They're holding two phones and screaming into both phones. Those are just classic photographs from the NYSE. A lot of those are from the 1980s. But that is the New York Stock Exchange. It's one of the two major American exchanges. The second one is the NASDAQ, which is much, much younger. The early 1970s is when the NASDAQ became a thing, and it was the world's first electronic stock exchange. The NASDAQ has no physical location, where the NYSE still has a location. You can go there, you can walk past it. You can see the bull out front. But the NASDAQ there's no physical location. And I would just stop there if you're new. Yes, there is an over-the-counter market called the OTC. Just don't go there if you are new. Trade on the New York Stock Exchange and NASDAQ listed stocks only. That's your best bet when you're learning. Traders use brokers to buy and sell their shares of stock. So I like to say this for new people as well. Whatever broker that you choose, be aware that you have choices. There are many brokers, and some of them are better than others for different types of things. It depends on what type of trading you want to do that will dictate what's the best broker for you to use. Don't stick with the first broker you learned just because you know where all the buttons are. People, even intermediate traders, will do that. They just don't want to learn something new, right? Because there's a lot of stuff you have to learn on your broker, how to do different types of orders, how to, you have to know where everything is. And once you know a broker really well, it's sometimes difficult to go through the learning process to learn something new. But don't sell yourself short because you don't want to put in the time. If you learned one broker, you can learn any broker. So when you're new, if you are ignoring any of the three parts of your broker, you should not do that. You should take the time to learn your chosen broker inside and out. There's going to be a desktop version of your broker. That's where you download software to your computer, laptop, or desktop. And usually that is the most feature-rich version of these brokers, but that is the one that you do. People will often use those. Desktop versions, Thinkorswim is a great example. People will use that quite a bit. There is a web version that virtually all brokers have. I use TradeStation presently as a broker, and I really like the TradeStation web interface. That works fine that works really well for the type of trading I do. So learn your web-based broker version as well. And then don't forget the mobile app. Sometimes people, if you only trade on the desktop, they just neglect the mobile app. They don't even download it. And just learn all three, because there may be a time, remember your router, remember it all dusty underneath the computer, underneath the TV stand. Your router is going to die, or your power is going to go out, or you're going to be out and about somewhere. And if you can just open up your mobile app on your phone, you can trade, you can close out a trade maybe, or whatever you need to do. So whatever you do, be sure to learn all three inside and out is highly recommended for all traders, but especially new traders when you're just learning. And here's the last thing I like to bring up to you guys about the stock market. Always remember that there is someone else on the other side of every trade you make. Another trader, another person. And I think about this with every trade I make. When I'm planning out a trade, I'm thinking about one. Right when I'm about to push the button, I always think, okay, there's a trader out there I am either buying or selling from, and is he or she more data informed than I am? That's the question. So think of this: are you buying for a better reason than they are selling? Again, if you're buying that share of whatever stock it is for $10, you think that's a good price. You're buying it because you probably think you're going long on it, so you probably think it's going to go up. Why else would you buy it? So this person is very happy to sell it to you at that exact same moment for the same price you're willing to pay for it, 10 bucks. So why is she selling at $10 when you are buying at $10? If she thought the price was going to appreciate, then she wouldn't be selling. She would just hold on to it. One of you has better data. One of you is a better trader. One of you is using more points of data, more pieces of data, more information to inform your trade. And whoever is most data informed is going to come out more than likely on the right side of that transaction. So always think about that. There is someone else on the other side of every trade you make. Is your thesis more data informed and just more solidly informed than the person with whom you are doing business? That's what I think about. All right, very basic things to know as we are wrapping up here. Remember, this class is just about what is a stock, what is the stock market, and how can we start learning, how can we start the long business of using the stock market to make money. Regular trading hours is always going to be 9:30 to 4 p.m. Eastern Standard Time, and that just doesn't change for anyone. And that is just something that if you're new to trading, you need to be realistically aware of that fact. Where, if you want to trade the first hour and a half of the market, if that's what you want to do, from 9:30 to 11, a whole lot of people like to trade that time frame. That's 9:30 to 11 Eastern Standard Time. What is your life like? Are you able to do that? Do you have to pick up the kids that time? Are you in another time zone? Are you in another country? How is this going to work? It sounds very common sense, I understand, but it is a true matter of fact. There are things you have to be aware of and you have to take into account. Just like trading takes a lot of time and trading takes making mistakes to learn. That's why the first two things you should You have to have the time to put into it, and you have to take small positions so you cannot be, taken out of the game by huge financial losses. You never want to risk enough money that would cause you pain if you lost all of it. That's not sexy. That's not what the internet says. That's not what, people will tell you if they're trying to convince you can get rich trading. That's not what this is about. That's not true. You need to take small positions so you don't get into financial trouble as you are learning. 9:30 to 4 doesn't change for anyone. There is a pre-market and an aftermarket. That's true. But if you're brand new to this, regular hours are recommended for beginners. Just like I highly recommend that you stick with NYSE and NASDAQ listed stocks, you should also stick with the regular hours. There's a lot of variation between 9:30 and 4, and there's a lot of different types of trading you can do throughout the day. The morning session is different from the afternoon session. Things move differently. You'll find out what's more interesting to you and what you have time to do and what, speaks to you. But if you're new, stick with the regular trading hours. Brokers differ widely. We mentioned that already, but just be aware of that. It's a very important point. Brokers differ. Find the one you like, learn it inside and out, and you will be better off the better you know your broker. And as well, you should learn your trading software and tools inside and out. And of course, BlackBoxStocks platform and the data it provides is one of those tools you have available to you. So soon, you will be taking the orientation class and the stock and options basics classes, and maybe the live trading with Swan seminar. You'll be taking those very soon, hopefully multiple times, so you can benefit from those, because you need to learn how to interpret the data that BlackBoxStocks provides you. And it takes a minute. There's no way around that. Finally, this. Most people know this, but there is risk. There is financial risk in trading. There just is. And anyone who says there's not is not telling you the truth. Take small positions when you are learning to trade. Don't get into that there's no reason to get into financial trouble by taking huge positions, or just don't do it. You can mitigate that risk with study, skill, and experience, but you can also mitigate it in the very beginning by taking tiny position sizes. You don't have to buy 10 shares of a $200 stock. Don't do that in the beginning. You do not have to do that. You can buy 1 share of a $10 stock and learn how to turn that $10 into $11.50. That's a good return. And then how to preserve that and turn that $11.50 into $13. That's a great return. And when you do that, you're mitigating your risk simply because you're not risking that much money in the live market to begin with. Just don't do that. People get into big trouble sometimes, and you do not have to do that. So I just like to make that point clear. Financial risk is real, but it can be mitigated with study, skill, and experience. And that's what this is all about. This is the first class in our BlackBoxStocks education experience. You can learn to trade the markets if you stick with these educational programs we have. Take more of our classes. Be dedicated. Don't give up. You can learn to trade the markets. So, where are we? We're here at the review. That's right, class. Do you remember long time ago, maybe about 14 minutes in the distant past, we talked about core concepts, beginning foundational elements that all learning depends upon. You have to build off core concepts. And we started with core concept number 1. What is a stock? Can you answer that from memory? What would you put on one of those spindly shoot off legs right there? What is a stock? Go ahead and answer it. That's correct. You get a gold star. I know. I'm weird. It's all right. No big deal. Everybody's unique, you know, everybody's weird. It's not a problem. What is a stock? I say, that's right. It is a partial ownership in a company. Don't let the electronic overlay take that out of your mind. Don't let the fact that there is a disconnect of technology and the ridiculous stupidity of the internet that is entertaining and horrible at the same time distracting us from the fact that a stock is a share of stock is partial ownership in a company. And if you're brand new, remember always that it can fluctuate widely and wildly based on supply and demand. So remember, your job as a trader is to identify, what were the 2 P words? That's correct. Patterns and probabilities. That's what's up. That's what we need to learn to do. And you can learn to do it. So core concept number 2, what is the stock market? That's right, a centralized location designed for the buying and selling of stock, of course. And remember as well, you want to keep your trading when you are new, specifically on the New York Stock Exchange and the NASDAQ exchanges. Just stay away from the OTC stocks. Sometimes people are drawn to them because they don't cost as much and they can, you know, they can be really cheap, sometimes just a penny or two. Stay away from those is my, you know, opinion. Trade primarily the NYSE and NASDAQ listed stocks. Now, I would like to say last here, one of the things that you're getting with your BlackBoxStocks membership, at the top, you see the education tab is circled at the very top, a little bit to the top right of your screen. That is where you find the listing of classes. You go there, click on education, it pulls down the class calendar. You see all of the classes offered populated in the daily calendar. You click on the class, it will register you if you would like automatically, and you're registered for the class. That's where you find all of these classes. You also see the bottom right hand corner, the homework tab. That is where you're going to find recordings of classes, various items that can help you learn, materials from YouTube and elsewhere. Check out the homework tab. There's also our Discord server has a homework area as well. Check that out. And then finally, you see the Black Box Start area circled at the top, which has got a lot of resources for new members. So go there if you're new and you're not accustomed to this interface yet of the member area of our homepage. Go to the Black Box Start area and see what you can see. There's a lot of helpful moderators and information at that location. And then the main chat area you see is where there is a lot of trade chat going on. It's primarily options flow chat, but it's definitely anything goes in there. If you have questions, there are full-time moderators that are in that room all the time, as well as on Discord. And I just urge you to get involved with the community, because that is, in my opinion, one of the most valuable aspects of what BlackBoxStocks offers. Not only are you getting the data and getting education on how to use and interpret the data, but you're also getting membership to a very large and robust community of traders of all levels. They're truly beginners all the way up to people who are truly amazing full-time traders who just know so much about so many things. And the culture, in my opinion, really is people learning how to do better, people learning how to become better traders, people learning how to make fewer mistakes, and just generally how to learn the market, learn how to trade it, and always figuring out what comes next. So I hope you enjoyed Intro to the Market. Again, what are stocks? What is the stock market? How does it all work? This is a very cursory overview. There is many more things on your to-do list that you will have to learn. However, I hope you guys have a great time out there, and feel free to contact me on Twitter or in Discord or an email at this information. I'm always happy to talk to new members, and there is no question that is considered too newbie or annoying for me. I love to help new people lose less money as they learn. So hit me up and I will see you guys around the community, and welcome to Black Box Stocks. Thank you for coming to class tonight, and I hope you have an amazing experience. Stay green.